Hi everyone, it's James here. Let's get into these charts today on Friday. I've got the master page in front of me showing all the main instruments that I'm sort of interested in at the moment. And then it's Bitcoin, NASDAQ, S&P, gold, silver, the dollar, and oil and gas. So from top left to right, Bitcoin dropping down. We saw hanging man candles on both the NASDAQ and the S&P yesterday. We got short on both of those. We're still short on gold and silver. These are continuing to move down, now breaking down below the 20-period moving averages, and in silver's case, down through the wedge bottom. The dollar is still faffing around in the moving average cluster, stuck in the average price, and I expect that we'll faff around here for some time. We've still got a gap above us on the dollar index, and currencies do like to fill the gaps, and so we might have to move up into there. If the dollar moves up, it's probably going to be because oil moves up too. They've been trading in sympathy together, and you can see actually that the chart shapes look quite similar. Now, nat gas we'll talk a little bit about further. I've had to exit my contract, but very fortunately the Pepperstone ETF was exactly the same price at that time yesterday. So I swung out of the futures contract, which expires tonight, and into this ETF at Pepperstone at the same price. Interestingly, as the Pepperstone ETF is slightly forward weighted, in other words, takes into the weighting some of the forward months, this is actually probably likely to hold better than the futures price. And as a result, as the futures have moved down a couple of pennies this morning, this one has not. And actually we're holding here and looking like we're trying to bounce. So I'm quite fortunate to have swung into this. I had to anyway because the contract expired. So now that I'm trading the continuous contract, we'll look at that chart in a little bit more detail shortly. WTI I'm still short. We added some more contracts short a couple of days ago. This has moved up a little bit, but let's have a look at the next chart. And then silver and gold moving down quite nicely. So let's get into the details now. This is not going to be the longest video. I'd encourage you to join us for Sunday Night Live this coming Sunday, every Sunday, and the links are up on this channel already. Make sure to subscribe and press the notification bell to this channel so you don't miss that update. So the NASDAQ has reached the top 200 period Bollinger Band now. Let's just adjust this Fibonacci up to the top there, and has formed a hanging man candle. I'm very hesitant to suggest that this could keep on going, but at the same time, I do believe that it could. Although I'm short based on this hanging man pattern at resistance and at the top 200 period Bollinger Band, it's quite possible that this could keep on squeezing up. Any pullbacks, as I said in yesterday's video, should be to the top of the green zone or maybe the black line just below that at about 25,800. Notice, however, that the 38.2% fib and the moving average cluster is way lower down. That's at 25,400 roughly, and it's not impossible that we might have to pull all the way back down there. So as we're short on both the NASDAQ and the S&P, and if we get some downwards momentum, let's see how far down we can get. Although I'm short on the indices, I'm long on the stock names on this page, and you might be able to see the arrows where we got in. Let's look at the two Bitcoin charts here. First of all, the price at Coinbase, and you can see where we've got to, spiking through the top of the flag, not closing above it, and trying to move down with a hanging man candle. Not looking great at the moment, and we may have to move back down. How far back down? I don't know. It depends on whether this is a bear flag or it isn't. If it is a bear flag, we're going to do something like this, and that'll take us down to about 40,000. And if it's not a bear flag, we might just pull back down to the supports sort of within the channel. That would take us down to about 74,000, maybe 73.5, the moving average cluster and the channel center line. I'm watching these very, very closely, and particularly over this weekend. Remember that all this stuff going on in Iran could, who knows what's going to happen. Maybe Trump will decide to bomb Iran again this weekend after hours. Or maybe not. Maybe there'll be a deal sealed and all of this stuff will go to the moon. I really don't know. Very difficult to trade. Anyway, I've got longs on Ethereum, Solana, and XRP2, and a couple of the other names. Nothing significant. On metals, I'm still short on gold and silver. I'll give you my sort of rough idea of what I think we could achieve. It's moving very slowly, but it is rolling down. And we've just got to close beneath this 20-period moving average on silver. Then I think we could get back down to the swing low bottom. It's a double bottom. It'll take some work to get through if we're going to get through it. And then back down to about 55 or 50. And I think if we get that far, as I always say, probably down to 48, just to, tickle the the bulls a little bit. Not the bulls, I said, with a U, right? Let's look at gold. Pretty similar sort of story, just below the 20-period moving average, and I think gold could get down there. Essentially, I'm still bullish on both gold and silver. We're just playing these retraces, and I'll look to get long as soon as possible. And actually, if we don't even get that low and we bounce out of these levels kind of around here, I'll reverse back to long. We'll take profit on the shorts if it looks like it's going to turn around. Take profit on the shorts and get long. And then natural gas and oil. We've just spoken about natural gas. This is the Henry Hub futures, and you can see we're right at the bottom of what I call the chop zone. Remember, I'm not trading the futures. I'm now trading the ETF at Pepperstone. But just to show you, we're right at the bottom of the yellow chop zone, which I spoke about many times over the last couple of weeks or so. And I said we might have to reach there. Well, we have reached there, and that's the way it looks. We could go a lot lower. There's actually a big rollover gap further down between about 2.2 and 2.5. So a pretty important level if we have to get back down there. So the futures have slumped back down to the bottom of the chop zone and to the top of this falling wedge. It's really, really important. And I said to you yesterday in yesterday's video that if we do have to move back down to the bottom of the chop zone and the top of the falling wedge, that could be the next support level. Let's look at this on the 4-hour chart. on the futures here, and we don't have any evidence of a bounce just yet. Because I'm not trading that, I'm not too worried, but we do have evidence of a bounce on the spot price here at Pepperstone. Not much, I have to admit, but we are not below that previous swing low, and we're trying at least. Doesn't look very hopeful, but if we bounce out of here, the futures may follow. This is slightly better than the futures because it is forward weighted. In other words, it's not the actual futures price, but the forward contracts are built into this pricing a little bit. So maybe we can bounce out of here. I got out of my futures position at 2.59, and I bought the ETF here at Pepperstone at exactly the same price. That was early this morning. So although I've realized the loss, I'm still in the same trade, and I think we have a better chance of this moving up faster on the ETF because of the forward weighting than the futures. I'll try and get back into the futures next week once all the rollover stuff is complete and the market settled down. Now on oil, to finish off, I'm still short, and we added more shorts on yesterday over there. We did probe a little higher than I expected, but we've sort of rejected from there already, and I just don't think we're going to move up much higher than here. I'm allowing for a move up into that gap, as I keep on saying. The top of the gap's at about 100, and the bottom of this gap is at 98.80-ish. And also notice that if we get up to the channel center line, we'll be at the top of the gap or thereabouts. So it's possible we may have to do that. And I'm not ruling out that oil may have to go much, much higher, but I don't think so. And I think we're going to be in and around the bottom or the center of the channel for some time to come, and then a sudden drop down to 68 and probably much lower in time to come. This is my feeling, and I posted up the reasons why, but we're going to have to exit this region. It's going to be choppy for a while, but I'm short, and I think we're going back down. It might take time, and you may need to be patient. And that's all I've got today, folks. Please like and subscribe. As I said, it really helps the channel, and it's the only way that we can really grow is by you telling YouTube that you enjoy the content. So I really like that. And if you'd like to join us on Sunday, click the subscribe button, nevertheless, and also the notification bell, which it looks like a bell near the subscribe button. Click on that, and you'll receive an alert every time I post a video and every time I go live. Sometimes I go live impromptu. And also make sure to join me on X at ArcisFX. I'll see you there. I post up a lot of stuff during the day. Take care. I'll see you on Sunday night. Don't miss it. Ciao.
ArcisFX, where the hustle connects. Trade that stock, that coin, that flex. From the charts to the checks, yeah, we cash those specs. We don't guess, we finesse. ArcisFX, every candle a test. Turn that stress into steps. We flex from the screen to the set. We collect, not guess, we finesse. Say it loud. Yeah, pair on my mind, let the Forex swing. Hips stack up like a diamond ring. London, New York, Tokyo night. Whole world moves when we click that buy. Cryptos jump like a crowd on stage. One wrong move, you lose that wage. So I scale that size, trail that win, cut that loss. Like I cut fake friends. ArcisFX, where the hustle connects.